So it looks like we have someone that just wrote in, Neal. They're asking about the leverage giving. They said, you
But
mentioned leverage giving before. Can you break it down in regular terms for someone who's never heard about it?
yeah, so leverage giving is an interesting one where there are people who have put money into foundations in the past, and they did that for their own tax purposes. So, like, whenever you hear these celebrities or billionaire types talk about stuff, oh, we gave this $10 million to charity. It's like, well, did you? Because usually it's their own foundation, and then they get a charitable contribution from that, and they can reduce their tax load. Right? There are a lot of rules to go along with it. One of the rules is that the foundation has to give away a certain percentage of its assets every year. And so leverage giving is a strategy that has been developed by some of these guys who basically they give you a loan in order to contribute. So they send the money to you and you send the money to a different charity and you get a large charitable deduction for it. And you prepay some interest, so they make some fees and all that kind of stuff. But it come on dollars ahead, simply because of the leverage involved. And, it does incur, a liability at the end, which could be, 20 years, 50 years, it's written up. Um, but that's the basics. You're effectively borrowing to give to charity, and there's a back end that you have to deal with farther down the line. Uh, Sometimes, upon death, which at that point doesn't matter. But yeah, that's the basics. I mean, it is obviously more complicated than that, but that's the basic mechanics. And so,
Sounds like a win-win deal, you're saying?
yeah, so
Mhm.
this is under one of the what I call the exotics, and it's a win-win if you're in a high tax bracket. So
Uh,
typically, what happens is all of these exotic strategies, they all carry fees or interest or something. There's some money that you're paying. And so, people selling film tax credits or renewable energy stuff, or, there's a book. Um, but the numbers always kind of come out the same. It's like, okay, if I'm a high tax bracket, I'm paying 35 or 37% federal plus another, whatever, 5%, 10%, or 13% if you're in California. Um, so I might be paying anywhere from 40 to 53, but 40 to 50%, let's say, on my high bracket income. I'm going to turn around and go into one of these other strategies and I'm going to pay 20-ish% to those guys in order to get the tax break. Um, and it's like, okay, that math works. I'm giving away 20 to get 40 back. So my net positive is 20. So it's a win-win in that sense. But you do got to come up with the 20% typically. And so, the charitable strategies is one of those where, that's kind of how the numbers typically work out. So if you're in those high brackets, then yeah.